What is going on, investors? Hopefully you guys are having a great day out there. I'm a little under the weather today, but we got work to do. Walmart reported their earnings, and we are going to get into them. Now, I am recording this about 9 a.m. Pacific time, so there's like 4 or 5 hours left of the trading day. But at the current time, the stock's up about $1 to about $152 per share. The street is reacting nicely to these numbers that came in from Walmart. Now, we'll talk about the comparable store sales. We'll get into the financials. Take a look at the revenue, the profit. There's a lot of shareholder-friendly stuff, not only from a shareholder perspective, but from an operating perspective as well. When we get over to Walmart's numbers, I think you'll want to stick around for those. Now, I know for a fact you are going to want to stick around, because from a technical, this is not always the case with Walmart, okay? You do a max chart of Walmart and you stretch the chart out. This thing just continues to go up and up and up. But from a technical perspective, we're at a really cool place with Walmart. And man, there's some opportunity here. There's an opportunity to potentially buy a dip. There's an opportunity to buy a breakout. There's a trade opportunity. There's a lot of opportunity here with the Walmart stock chart. We'll talk about that here in a second. Now, first thing I want to talk about are these numbers that Walmart reported, and I tell you what, they blew it out of the park. You look at United States comparable store sales came in at 5.2%. The expectation was for just over 3%. And I just did a video on Home Depot. They missed their comp sales, and the stock is down about 5%. Walmart blew it out of the park. Now take a look at Sam's Club. That's absolutely on fire. We'll see evidence of that more here on the statement of income as well. They were up 7.7% ex fuel on their comp sales. The expectation was like half that, even more than half that, down to 2.98%. So the street was expecting 2.98% comp sales at Sam's Club. They came in at 7.7%. Man, that Sam's Club is blowing it out of the park for Walmart. Now, the headlines reads that they boost their guidance. I read through this guidance. It's more reaffirming with a little bit of a nudge. It's not necessarily like a big boost, but they did boost some things in here, but nothing that was necessarily out of the ordinary for Walmart. Now, let's get into the statement of income. This is our profit, our revenue, our losses, or in this case, certainly profit with Walmart. We got our 3 months ended here. Left-hand column is the most recent quarter. Two right-hand columns are 6 months year over year over there. Now we've got our revenues here on the top line. We've got these net sales that went up 2.2%, went from 136 billion. It's not 136,000, not 136 million. It's $136.8 billion worth of sales. In the most recent year, we did $139.9 billion worth of net sales. That's up 2.2%, like I said. Now, here's that evidence of Sam's Club. Okay, Sam's Club is very similar to Costco. They charge a membership fee. We'll see evidence of this flowing down to the operating side as well, up 28.2%. Notice we went from just under $1 billion up to very close to $1.2 billion worth of sales over the last year in terms of membership and those types of things. Now, that's absolutely fantastic. We've got cost of sales. You got to be comfortable. This is a low margin business. You look at Amazon, you look at Target, those types of stores, they all operate on these types of margins. Off of these sales of $139 billion, we had to pay $105 billion. You got low prices at Walmart. That is because they're not making a whole bunch of money when they're selling you these products. Now, they also got other operating, selling, general, administrative. These are all the employees and those types of things and the back office to handle that. Take a look at this in the most recent quarter. Those were actually down 1.7% from 28.9 down to 28.5. And the reason why I'm highlighting this is, one, it's going to flow down to this operating side. But one thing that no matter where you go, you turn on CNBC, you look at videos here on YouTube, what are people talking about? That's inflation, okay? And one way it impacts you as a consumer, you see gas prices go up, lumber prices, those types of things, home prices go up. So you see the result of that, okay? And the Fed is going to make you believe those are temporary. Now, the worrisome thing with Walmart is actually wage inflation. And that, in my opinion, is the true sign of inflation, is actually when wages start going up. And this is evidence that we're not seeing that over the last year, and certainly in the most recent quarter. Take a look at for the last 6 months as well. Our costs are basically dead flat, okay? 0.05% from a rounding perspective. These are basically the same numbers over at Walmart. So we are not necessarily seeing wage inflation yet. And I think if we saw wage inflation, that would absolutely be a negative for Walmart. They've got so many employees, so many moving parts to their business that require wages that it would be worrisome. But we're not seeing evidence of that yet. And so that is interesting as well. Now, from an operating income perspective, you guessed it, you grow this membership revenue, which flows really nicely down to the operating side. You cut your costs from your employee side. Yeah, your operating income is going to go up 21% from $6 billion up to $7.35 billion. I tell you what, Walmart could afford to raise wages a little bit and it wouldn't necessarily impact their financials a whole lot because these are absolutely fantastic. Now, they've got some interest on their debt, their finance leases, their interest income as well. That actually gets credited back to them. We come down here from a net income perspective. If you want to factor in absolutely everything, it actually went down a little bit, okay? And so this is why we don't always come all the way down to a net income perspective, because income taxes can change. Some gains and losses on investments. So Walmart makes investments in other, retail and other stores out there, and sometimes they make gains on that. Sometimes they actually lose money. Last year they made a bunch of money. This year they actually lost money, and so that really hurt their net income. Notice net income down 34%. So when you read these sheets, when you read these balance sheets and you see EPS and these types of things on headlines, what I want you to realize is EPS is really impacted by a lot of things that are not necessarily related to operating the business. Things like income taxes, things like interest rates, things like gains and losses on other investments that might be temporary. So that's why we often stop at operating income, and it actually makes reading these financials a heck of a lot easier. When you stop right here at operating income and see it's up 21%, that tells you the whole story, in my opinion, what you got going on over at Walmart. Now, the other thing that I thought was interesting, I saw this with Home Depot as well. Take a look at inventories. We've moved to the balance sheet over here at Walmart. Got plenty of cash sitting here on the balance sheet. Got plenty in receivables. This is up not only on a year-to-year basis, but also from a 6-month basis from the beginning of the year as well. All things looking really good from a financial perspective. Now, what I did notice that it was our inventory is up quite a bit. We've got $47.7 billion worth of inventory. The beginning of the year, we're sitting about 45, and you'd expect to be a little light, okay, heading into January of last year. That's because you've just finished Q4. You've just extinguished a fair amount of inventory over at Walmart. But I noticed year over year, we were sitting around $41 billion worth of inventory this time last year. Now we're sitting at, $6 billion and some change over that. So a couple ways you can interpret this, okay? It could be that Walmart is stacking up the inventory because it is so difficult from a shipping perspective, from a logistics standpoint, from a supply chain standpoint, to get this inventory into the store. They don't want to worry about that for Q4. So they're coming in here a quarter before, stacking up inventory, and then with anticipation to unload that into Q4. I don't necessarily know if that's what Walmart is wanting to do, but we saw this with Home Depot as well. I've got to imagine that's what these stores are doing. Me personally, from an anecdotal perspective, no way am I comparing myself to Walmart or Home Depot, but just as an e-commerce retailer myself, I'm doing the exact same thing. I am stocking my warehouse basically with inventory now because I don't want to have to try to get that stuff here in early Q4. I want to get it now because it's very, very, very tight supply chains at the current time. Now, all things being considered, everything looks really good. Yes, this company has some liabilities. Yes, it has some long-term debt, but when you've got hundreds of billions of dollars worth of sales in a year, those things are absolutely expected. Now, from a cash flow perspective, a couple things that I want to show you here. We've got our 6 months ended here. All things being considered, very much, in line with what we'd expect. They had these net unrealized gains or losses on investments. Last year, they got a big old benefit from that. This year, we actually had that hurt our income from operations. And so that gives us operating activities down here from a cash flow perspective coming in at $12.4 billion. Last year, we're right around 19. Again, with this big old net realized gain here of $4 billion. All things being considered, relatively flat from a cash flow perspective. That's about what you'd expect with Walmart. Now, I want to show you really quickly before we get over to the stock chart, the shareholder friendly stuff that's going over at Walmart. Now, they've repaid some long-term debt, $3 billion. They paid a little over $3 billion in dividend. They repurchased a ton of stock. $5.2 billion. So Walmart is doing a nice job of doing some shareholder friendly stuff, repaying debt, paying dividends, buying back the stock. They're doing all that. Now, from a technical perspective, I'm liking what I'm seeing. There's two options here. So Walmart, right now at the current time, the stock is right around $151. I have highs here of $154 per share. We'll keep the numbers round. Okay, twice this stock has run up very close to $154 per share. In fact, it ran up here to 151, came all the way down here to 135, came all the way back up here to 154, went all the way down to $126 per share. Okay, this was back in March of 2021. This stock had a big downdraft. Now we've come all the way back up here to very, very close. We're actually at 151, which was the previous highs. And I think we have an opportunity to approach this 154. Two things can happen at this level. And two great things, in my opinion, if you want to buy shares of Walmart. We could break above 154. We can come up here to 155, 156. Obviously, that's over 154. That would be a breakout. And I could bring up stock charts like Facebook. When you break up above all-time highs, things want to run. You could look at Apple too. Man, the market's not doing very well, but from a technical, this is why it's so powerful, okay? The market's selling off. But Apple, from a technical perspective, is breaking above all-time highs. And so everybody's looking at this from a technical perspective and saying, well, this thing looked like it wants to go higher. Walmart, similar situation. We might break above these highs at 154. You break above these highs at 154. All of a sudden now 154 instead of resistance turns into support. And so you come up here to 155, retest 154. It could be off to the races. This stock could add 10, 15% onto its market cap and its price very quickly. Now, the other option is we come up here just like we've done twice over the last year or so. We come up here into the 150 range and we get rejected and this thing pulls back, and it could potentially pull back hard. The bottom end of our range is down here at about 140. Now, we can break through 140. We did break through 140, okay? And we came all the way down here to 128. Anywhere in here from 128 to 140. I know that's a big gap, but look, this is in my opinion kind of a buy and hold opportunity. You buy this one on the pullback, it's really a buy and hold opportunity. I think you buy this on the breakout, it's more of a trade, okay? You buy it here at 154, hoping you rally up to 160, 162, 164, that type of thing, okay? You buy it on the breakdown, okay, this thing hits 154, pulls back, you've got some area of support here, 140, you've got an intermediate area here at 145, even lower, 127, 128 on this one. So I like Walmart. Two different ways, okay? I like it on the breakout. I like it on the pullback. This is a dividend-paying stock. It's not going to go anywhere. You might ask yourself, do I own shares of Walmart? Yes, I do. Do I own shares of Amazon? Yes, I do. Last thought I'm going to leave you with today, and this is probably the most important thing. I'm on a site like Seeking Alpha a lot. I read through the comments. People are either championing Walmart or they're championing Amazon, like they're rooting for the Lakers or the Celtics or the Giants or the Dodgers, or like they're a Democrat or the Republican. Don't do that. That's one of the biggest mistakes I see investors make. You can own Walmart shares. You can own Amazon shares. In fact, I think you really should buy both. One of them pays a dividend. They both capture a lot of retail sales here in the United States, which I think over the long term will be trending up. And both companies, Amazon and Walmart, are very, very well positioned to capture those sales. That was Walmart. Look for it either to break out or break down, and either one has some opportunity for you. Let me know down in the comments if you take advantage of that. That was Walmart. Hopefully, you guys enjoy your day. Good luck with your investments.